Well, the world could definitely live with one less war, that's for sure. Markets, of course, would love that. The uncertainties that war throws up, we could do definitely without those. But now it seems Israel and Hamas could be looking for political solutions. And if all goes as per plan, a truce is definitely something we're seeing on the cards. On the market front, in the Indian markets, the Nifty has gained about 40 basis points today and inched towards 19,800. So we're going to discuss the impact of a possible truce between Israel and Hamas, what it would mean for markets around the world, and whether or not it could be an early Christmas for Indian investors. But let's get this quick snapshot of today's market action. Let's find out from Vinny exactly what the markets have done for us today. So there is the growing buzz, Vinny, of a possible truce, and that can only mean good things and perhaps an early Christmas. But tell us what we saw in the markets today by the close of business.
So absolutely, in terms of the markets that we saw, that today was 19,800, below those levels. It did manage to touch the level, the Nifty, but yes, at the end of the day, it managed to close only below those levels. 19,788 around those levels is what the Nifty managed to close at. Sensex 2 was trading with gains of almost 0.4%. So yes, benchmark indices today were something that was outperforming the broader markets. A very different story than what we've seen coming in the past. Nifty mid cap, Nifty small cap, very subdued day of trade coming in for both the Nifty mid cap as well as the small cap. What sectors actually performed today was the metal, realty, those were seeing strong gains as well as pharma was also the ones which were seeing very good gains. In terms of the top gainers that came in from the metal pack as well, we have something like a JSW Steel which was holding on to good gains. We had Hindalco, Welspun Corp among the Nifty metal category which actually saw good gains as well. Other than that, in the realty pack, we had Suntech Realty that was holding on to good gains as well after we had a brokerage note initiating coverage with a buy rating, Motilal Oswal. While in terms of Oberoi Realty, last couple of days of trading session of gains that we've seen, today also managed to see good gains after obviously yesterday the news flow was in terms of foray into NCR region. Today was a Thane luxury property and project that they're starting as well. So that kept Suntech Realty a buzz as well. Let's look at some of the movers that came in other than on the negative side was KPIT Tech. That was down and out in trade. Kotak initiated, gave a sell rating for this one. They're expecting it to see a fall coming in, given that, KPIT Tech has already seen such a good run up. So KPIT Tech was something that was under pressure as well. Other than that, in terms of individual movers on the Nifty 50 today, we have insurance names that are doing well, whether an SBI Life, HDFC Life, all of these were holding on to very good gains. Other than that, we have names like Titan that actually managed to touch an all-time high, cross the market cap of 3 lakh crores as well. So yes, interesting day of trade coming in. A lot of individual movers in trade. Mostly, obviously, benchmark indices was something that did much better than the broader markets today.
Fair enough. Thanks, Vinny, for walking us through today's trade highlights. But let's connect with Geoff Dennis, Independent Emerging Markets Commentator. On India Tonight, he's joining us to tell us about the possible impact of a truce between Israel and Hamas. Geoff, war-related news typically make markets nervous and pretty volatile. And now that we're hearing these buzzes of a possible truce in the making between Hamas and Israel, tell us what sort of reaction one should expect in the global markets, perhaps with a historical context with how markets move to such news when there has been an ongoing conflict.
I think there'll be some relief, of course, because a truce would be very welcome, although that's far from a solution to the problems between Hamas and Israel in the long term. So one has to be a little careful in terms of extrapolating this too far into the future. But also, we've had such a risk-on performance by markets recently on lower U.S. bond yields and hopes that U.S. interest rates have finally peaked, of course, helped by that October inflation number. I doubt it'll have that big an effect. For me, it's interesting this morning, for example, that the U.S. futures look as they're going to be down a bit. The retail numbers were a bit soft this morning, and basically, I think that seems to be the driver, not excitement about a potential truce between Hamas and Israel. Bear in mind also that oil prices are down remarkably since October the 7th, when this crisis began, by about $10 a barrel, and they're down a bit today. All of that is sort of unusual for a Middle Eastern crisis. So you roll all that together, particularly the big move markets recently, I don't think you'll get a dramatic positive reaction to any potential truce over the next few days.
You could be very right, Geoff. The immediate impact on global markets when war actually broke out in the aftermath of that Hamas terrorist attack on Israel, that had been fairly limited, and perhaps investors felt that that conflict would be contained. But then, of course, there was the prospect of a regional spillover, and that grew, which added to that sense of unease in the markets. But you correctly mentioned the impact on oil prices, considering that this contagion could involve the oil exporting nations. At least that was one belief at one time, and the fear as well. There could be supply bottlenecks when it came to oil. So will those ebb now? How do you think oil prices will play out amidst the possibility of truce between Hamas and Israel, even as we wait for that decision by OPEC Plus on more production cuts?
Right. Well, a couple of things there. First of all, of course, what I did mention, and you rightly did in your follow-up question, is I didn't mention the possibility that this conflict between Hamas and Israel could still escalate and spread within the Middle East. And if that were to be the case, then I think the market reaction to that would be quite negative, of course. So maybe that seems unlikely given that we're talking truce, but that's obviously still a possibility. You will know, and the listeners will know, that typical Middle Eastern crises before have led to dramatic rises in the oil price. And so this is clearly very different, although obviously we have to keep an eye on, down the road as well. As far as OPEC Plus is concerned, yes, I think they're already beginning to talk about the potential for a further cut in oil supplies. Also, the U.S. economy is slow a little bit, which could act in the other way, pulling prices down. So if you look at it overall, I think we've seen a big prices. I doubt we go much lower in the short term. But what I think will be the driver of that will be the potential for OPEC Plus to cut, say, another 500,000 barrels a day, set against the outlook for the global economy. Overall, though, I don't see a sharp rise in the price of oil being a problem for the markets over the next few weeks and months.
India, the RBI has been flagging off concerns, Geoff, about a continued battle against inflation, and they have been citing global risks. Inflation has been stemming from higher crude oil prices. It's always a big threat for India, which is a big importer of oil. What are the benefits you see accruing to the Indian market from the back of this possible truce? You said it is going to be potentially limited in nature, but especially when it comes to crude oil prices, you were talking about other factors that would be at play, not least of which would be a possible American recession in 2024. But there is also the looming threat of further slowing down Chinese economy, and that brings its own problems to the world. What do you think these factors are going to play out? How are they going to play out in the Indian context?
Well, I happen to agree with your comments earlier about from both Goldman and Morgan Stanley, I think, to be bullish about India. I'm very bullish about India, and I think that's the right attitude to have. I think if you were to get a settling down of this crisis in the Middle East, although, maybe we're a long way from there at this point in time, but whether to be a settling down, I think that will continue to push investors into the emerging markets generally, which have done very well over the last few weeks. We're now up around 3.5% year to date, which is not great, but certainly a lot better than it was a month or so ago. And I think you would expect that to continue over the rest of the year as the risk of higher interest rates in the US fades, and indeed bond yields may fall further over the next few weeks. This is also a very, very good seasonal time of the year we're entering now. November through April has always been the best 6 months of the year for emerging markets. So I expect all of that to be very helpful. And I think India will get a lot of benefit from that, because although, yes, the RBI is concerned about inflation, interest rates are positive in real terms. Doesn't look as if they're going to have to raise rates anymore. And I guess, as we've sort of implied so far, the big risk to that would be if oil prices take off for whatever reason, either the spreading of the Middle East prices to other parts of the region, and or a big cut in supply by OPEC Plus. But as things stand right now, a settling down of the Middle East combined with what we're seeing in the global economy, EM looks good, and India looks very good within the emerging markets. So I think more foreign investors will return to India, and I think the market looks good over the next several weeks and months.
Foreign investors return to India, Geoff. Where do you think they're parking their money in the Indian equity markets? What pockets look the most promising to you right now, where foreign inflow should be expected the most?
The concern, I guess, has to be the extent to which Indian exporters might be exposed to the slowdown in China, or perhaps I should say the disappointing performance of China. And I think that's something which is going to hold a lot of export sectors around EM down. So I think what you would be focusing on, I think, is more the domestic sectors, notwithstanding what I've said, obviously tech exports. I would like technology, which is doing much better around the world. I would also like pharma. I think the banks should be heading into, should we say, calmer interest rates have peaked, and the outlook for the economy is good, and also for the market overall. And I think some selective exposure to the consumer sector as well would make sense, because in a world where people are returning to the emerging markets gradually, India remains now, or India no matter remains, India is now the best growth story in the emerging markets, and some of that should spill over into typical consumer plays, I guess. So I think that we don't focus too much on sectors these days, but those would be some of the ideas I would have for Indian sectors based on the scenario that I've laid out there.
Consumption, you said pharma, and of course IT stocks have been on a tear lately, and I'll talk about that in a moment, but I'll let you go. Geoff, it's always a pleasure getting in your perspective. Thanks for joining us tonight on India Tonight.
Thank you.